What's going on, YouTube? CJ here with the Trading Collective, coming at you with another trading breakdown video. So today we're going to be talking about FSR Fisker. This is a trade that happened last week, and we were spotting a trend reversal. So we saw a very nice spike up here, and then we saw it fall down. Before I get into the video, if you guys wouldn't mind smashing that like button for the YouTube algorithm, subscribing if you haven't already done so, and if you guys are wanting to see these trades live, join our Discord. It's totally free and the link's down in the description below. And if you're wondering about the algorithm on your screen that you're seeing here, throwing short and long signals, or this little dashboard here that's reading out all this info, this is a Selene algo. We have a 14-day free trial also available for it. More info in the description. So without further ado, we're going to roll right into the video. So this is Fisker 10-minute chart, and we're going to be talking about why I took this trade and kind of the breakdown and the thought process that was happening when trading this. So these lines that you're seeing here is Fibonacci. If you guys aren't familiar with the Fibonacci or you don't know how to use it, look in the top right and there will be a video taking you through the steps of using the Fibonacci. It's a really good technical analysis tool, and it's really pretty awesome for price projection. As you can see, it getting hung up on this green line here, this Fibonacci line here, this Fibonacci line here, falling down. When it falls down to certain levels, it's falling to Fibonacci levels. So Fisker overnight popped up because they had a conference, and it would have been really awesome to take this long signal here under the premise that they were going to have good news on the conference. We didn't take it, unfortunately, but that's okay. There's still money to be made on both sides of things. That's the beautiful thing about options. So we watched it all through the 10th and through the 11th, and then on the 12th, this thing opened and started filling that gap downward. So this was a very large gap up, and what we were looking to play was the gap down, or the gap fill. That's what it's commonly referred to. So we took this short signal here, and the plan was to keep it a really tight stop loss, because it could have just, because it was gapping down on the open, it could have just tried to fill it back up. So we're going to drop a support line here. And what we're seeing with that is, because this is after it had gapped up, the first place that it had fallen down to, it's very important to note that this is in between Fibonacci levels. So it's important to have price action recognition and seeing this sort of support. So we opened, and we took this short signal shortly after open for about a week out contract. These contracts were expiring August 20th. And our stop loss was going to say, hey, if we broke even for this support line, or if we broke this support line, meaning we closed the candle above, that means that we're going to fill the gap back upwards, and maybe we'll reconsider taking a short position at this Fibonacci level. Fortunately, that never happened. We never went red on this position, and we actually held this position for a couple days because you're seeing a nice trend downwards on this day. Made what's called a bear flag, or a bear pennant for some people, because it's dropping down and then making this kind of range here. So we stuck in the play. We scaled out a little bit of profit as the day went on. You can see right here, we fell from one Fibonacci level right to another. Boom, took a little bit of profit right there. We fell to another one just a few minutes later. Boom, took another little profit there. And we started falling below into the close. We opened up on the next day, and we took even more profit here, and we were closed out at the end of that day. We had already closed out the rest of our position. Some of our members in our Discord, I'm looking at a screenshot right now, took over 2,000% return. I'm not even kidding you. I'll just show you this position right here. This was crazy. Now, we're never going to try to promise gains like this or anything of that nature, but this is just kind of showing you the power of options. This was a weekly contract. Weeklies can be a bit skeptical sometimes, especially if it's Wednesday or Thursday of that week and your position isn't going the way you want. But you can see here how cheap it was. The average cost of this position for our member was $0.04, $4. $4 for one contract, and he made that into 0.89. So pretty solid return, I'd say. And yeah, that's going to be the end of this video. If you guys wouldn't mind smashing that like button or subscribing, stay tuned for the next one, and we'll see you later. Take care, guys.